Welcome to this explainer. So picture this. I'm a veteran financial planner, and you're my brand new, highly skeptical client sitting right across the desk from me. You're glancing down at your smartphone, then looking back at me, wondering, are my services entirely obsolete in today's digital age? Can a few lines of code do my job better and way cheaper? Honestly, it's a completely fair position to take. Let's just address the elephant in the room right out of the gate. You're asking a totally valid, logical question. Why on earth should you pay a human advisor a traditional 1% fee when an app on your phone can manage your money for a fraction of that cost? It's literally the central debate in modern wealth management right now. Cost savings on one side, deep personalization and trust on the other. Section 1, the algorithm in the room. Acknowledging the power of automated wealth management. Look, let's dive right in by fully validating your point, because the truth is, the algorithms out there are incredibly powerful. If I sat here and pretended the technology wasn't absolutely amazing, I'd lose your trust in a heartbeat. I mean, platforms like Betterment and Wealthfront are charging base fees as low as 0.25%, and we're not talking about niche little tools anymore. They're managing over $1.8 trillion in assets with ruthless automated efficiency. They don't sleep, they don't take vacations, and they execute trades with absolute mathematical precision. The sheer scale and speed, it's genuinely breathtaking. The divide here is just incredibly clear. On one hand, generic AI and robo-advisors are available 24/7, they're dirt cheap, and they're instantaneous. Contrast that with traditional human advisors. We can be expensive, our engagement is often episodic, and, you usually have to actually schedule an appointment just to talk to us. If we're purely comparing convenience, the app in your pocket is going to win every single time. Section 2, where the machines win. Math, taxes, and speed. Now, as someone who's done this for decades, I'll be the first to admit that for pure mathematical processing and raw speed, the machines absolutely win. Hands down. Any advisor telling you otherwise is just living in the past. Software just completely excels at these rules-based tasks. An AI can capture 2 to 4 times more tax savings through direct indexing, which is basically buying hundreds of individual stocks, just so it can harvest tax losses automatically at a micro level. It can rebalance your portfolio at a frequency no human could ever match and aggregate your financial data 24/7 without you ever having to lift a finger. As the data from AI Magics points out, for certain financial situations, an algorithm is demonstrably better. If your finances are highly straightforward, like say you just need basic asset allocation, you're W-2 employed, and you don't have complex legacy goals, an algorithm is an incredible tool. It beats a human crunching numbers on a spreadsheet any day of the week, without question. Section 3, the context blind spot. Why math isn't enough. Okay, here's where we pivot. Because wealth, it isn't just about math. It's deeply about the context of your life. And this right here is the massive blind spot where algorithms fundamentally misunderstand what holistic financial planning actually is. Math gets you an answer, sure, but context gets you the right answer. Let me give you a real-world example of exactly what I mean. Recently, financial planners tested advanced AI chatbots like ChatGPT and Claude with this exact prompt. What is the right asset allocation for a 65-year-old retired couple? Now, that seems like a simple math problem, right? The kind of thing software should just eat for breakfast. But the results exposed a critical flaw in relying purely on algorithms. The AI spit out a generic, overly conservative answer based solely on age, relying on the super outdated rule of 100, where you literally just subtract your age from 100 to get your stock allocation percentage. So it suggested 35% stocks and 65% bonds. Meanwhile, a human advisor knows this blind allocation could actually slash your sustainable retirement income and severely limit the growth you desperately need to outpace decades of inflation. Yikes, right? The thing is, generic AI operates in a vacuum. It completely lacks your specific financial DNA. It doesn't know a thing about your health history, your family goals, or your legacy plans. It forces you to adapt to its generic, pre-built limitations, basically shoving you into a neat little box. A human advisor takes the exact opposite approach. We adapt the strategy to fit you, building a plan around the messy nuances of your actual reality. Section 4. When life gets complicated, the messy human reality of money. Because as your life progresses, your finances stop being a simple math equation. They stop being something you can solve with a clean line of code, and they start getting remarkably complicated and beautifully messy. When you hit major life transitions, everything changes. Imagine navigating a messy divorce or managing a sudden, emotionally heavy inheritance. Think about funding a complex career change or coordinating long-term care during a terrifying health crisis. In those moments, you aren't just calculating a safe withdrawal rate. You're dealing with grief, stress, and deeply emotional family dynamics. Software simply cannot process those emotional variables or act as a trusted sounding board. So, the absolutely crucial point here is that as your advisor, we are planning for human wealth. True wealth isn't just some high score on a net worth tracker. It's an entire philosophy. It's about aligning your money with your deepest values, your relationships, your physical well-being, your peace of mind, and your family's legacy. Planning for all of that, it requires a profound level of trust that no algorithm is ever going to earn. While an app can run 10,000 computerized market simulations in 5 seconds, that processing power means absolutely nothing in a human crisis. Only a human advisor can sit down with you and help negotiate a really complex estate split among your siblings without tearing your family apart. AI brings fluency and speed, but humans bring empathy, nuanced judgment, and the ability to navigate deeply complex negotiations. Section 5. The hidden cost of DIY. The price of panic and missed opportunities. Now, you might be sitting there thinking, managing this yourself with a 0.25% app is saving you money, and hey, it feels incredibly efficient on the surface. But let's talk about the hidden, often catastrophic costs of the DIY approach when things actually go wrong and the waters get rough. Because the absolute biggest threat to your financial success is not market risk, it's not a recession, it's actually your own behavior. When the market drops 20%, your portfolio app flashes bright red, and you are overwhelmingly tempted to panic sell everything just to stop the bleeding. In that moment of intense fear, your perfectly coded algorithm isn't going to talk you off the ledge. And this is exactly where human value becomes incredibly quantifiable. A comprehensive Vanguard study showed that a skilled human advisor can actually add approximately 3% in net returns annually. How? Well, not by picking magic stocks or predicting the future, but primarily through behavioral coaching, being that trusted voice of reason, and strategic, contextual tax planning that a generic app simply cannot customize to your life. Section 6. The hybrid wealth future, combining deterministic math with human judgment. Let's look to the future, because honestly, this shouldn't be a cage match between humans and machines. The modern approach isn't about choosing one or the other. It's about combining them into a powerful advisor-grade hybrid system. When we lay out the core differences side by side, the synergy is just obvious. AI perfectly handles the affordable, high-frequency, 24/7 data analysis. It totally thrives on rules-based logic. But human advisors, we handle the high-stakes situations, the emotionally complex realities of wealth, and most importantly, we hold the fiduciary duty to put your unique, messy human interests first. As a modern planner, I actually use sophisticated platforms like Farther or Origin to handle the cent-level math deterministically behind the scenes. The software processes the data, tracks your spending, and optimizes the baseline calculations. And you know what that does? It frees me up to actually coach you, to deeply understand your life goals, provide genuine wisdom, and hold you accountable to the long-term promises you've made to yourself. So as your potential advisor, my coaching advice to you today is exactly this. Let the incredibly fast technology track your budget, let it meticulously harvest your tax losses, and let it rebalance your portfolio in the background. Absolutely use it for that. But when your life actually changes, when the path forward becomes ambiguous and deeply personal, that is when you must rely on human judgment. I'll leave you with this final provocative thought. When your world turns upside down, whether it's a terrifying market crash or a sudden life-altering health crisis in your family, an algorithm is just going to send you a cold push notification. But a human advisor, we will pull up a chair, look you in the eye, and figure it out together. Thank you for joining me for this explainer, and I really look forward to building your human wealth.